It's time to focus on seniors with Helping Seniors TV. The television show designed to make you aware of senior issues and needs, as well as to acquaint you with the resources available to help you age in place and with dignity. Now, here's your host, Joe Steckler.
I'm Joe Steckler, and welcome to Helping Seniors, the television arm of Helping Seniors of Brevard County. Our show is designed to provide you with information on how to develop your own aging and care plans. Our topic today is reverse mortgages. And joining me is Barbara McIntyre of Reverse Mortgage Funding. Welcome, Barbara.
Hi, Joe. Good to see you.
It's good to have you back.
Thank you.
You know, folks, I've done several shows, radio and TV, with Barbara, and the subject of reverse mortgages and funding, I think, in general, Barbara, is something that's a topic that more seniors need to know about for two reasons. One, they could help them, but two, if they get into the darn thing and don't understand what they've gotten themselves into, or don't do it the right way, they're in for more grief. Or I guess there's a third thing. They think they've done something that they haven't really done. And we've got somebody that sort of fits that category. And I'm going to ask you to talk about that today without any names, because I think what you've done, what you bring to this show, is you help our viewers understand what they can do to help themselves and what they can do to hurt themselves.
Right. That's exactly true. And reverse mortgages, or the home equity conversion mortgage, or HECM, which is what it's actually really called, it's a complex product.
Yeah.
And
what's this new? What is a home equity conversion?
A home equity conversion mortgage is actually just a lien. It's another type of mortgage that's attached to a home that allows for the homeowner to tap into equity for things they need. It is not that the bank is buying the house from the borrower, or that they're going to use all the money and there's no ownership left for the family or their heirs. That's not what a home equity conversion or reverse mortgage is.
Well, what's a good or bad thing about it?
Well, a good thing about it, and there's many good things about it, is that it allows boomers and seniors to tap into their housing wealth. And what I mean by that is they've been paying on this house, and now they have a house with either a very little mortgage or no mortgage at all, but they might need financial resources to do other things like age in place at home, or do home repairs, or to do anything, bring home health care into the house, and they are short of money. So by the use of this mortgage, what they're actually able to do is let the house now start to give them money so that they can use it as the resource, a part of their financial retirement plan, to be able to stay at home and not do without.
Okay, all right, let me ask you a question then. Let's say there's somebody 75, or maybe 68. And they've paid their mortgages off, and they own a home that's valued at $200,000.
Okay.
How much can they take out in a home equity?
It's again a little more complicated than that. They can have access to probably, I would guess, if they're 68, probably only about 58% of that $200,000 value. Because at 68, they're still very young, and they're presumed they're going to live a number of more years.
Okay.
So let's say they have access to about 58% of the 200,000. That doesn't mean they can just draw that money out and go spend it. It means that they have access to it, and they have choices about how they utilize it. That's where I suggest that to be smart with your money and to do the right thing and make the right choices with this mortgage product, you have to sit down at your kitchen table with somebody who is going to really teach you all your options so that when you actually obtain the mortgage, you know what you've done and you have a strategy in place for using it.
But let's say if somebody did, and they had a $200,000 house, and they had to make a roof repair, and
Right.
it cost them $15,000 to put a roof on the house. How much time, or do they have to repay that right away, or could they wait 10 years to repay it?
Absolutely. They don't. The thing that's interesting about reverse mortgage is that most people think that this mortgage, you have it and you never make a payment until you die and then it's paid back. Actually, with a reverse mortgage, it's really a flexible payment mortgage, meaning you can make any payment anytime back to the reverse mortgage product. What that means is, let's say you have obtained that 58% of the $200,000 and now you have a roof repair. You can draw out the monies you need to make that repair,
right.
And then you have a choice. You can either make payments back to the loan so that you can redraw it again in the future, or you're not obligated to make any principal or interest payment whatsoever. That's why it is a great strategy for retirees, because retirees are living on fixed budgets. They have oftentimes much reduced income. Many people don't have pensions any longer. They use retirement accounts that have been affected by the downturn in the markets. So with a mortgage that doesn't require a principal or interest payment to be made, we've now allowed this homeowner to not be so strapped for money and to have a resource to still take care of their house.
I'm just trying to, there's got to be, they actually could have it $15,000 until they die.
Absolutely. Now, all mortgages that are given by lenders or banks, why does a lender want to give the mortgage to anybody? Because there's interest attached to the loan. So the interest, when no one is making a payment, is accumulating in the debt. So if you borrow $15,000 and you have a 3% interest rate, that 3% interest is accumulating in the loan, so the $15,000 is growing. The debt is getting larger. One day, when the borrower no longer lives in the house and the heirs inherit the house, or the borrowers decided to move and sell the house themselves, now they have a loan that has to be repaid. If they only borrowed $15,000, even though they were entitled to, much more, because we said 58% of 200,000.
Right.
But let's say they only borrowed the 15,000. Well, depending on how many years that interest has been accumulating in the debt, they're going to owe more money back. But they're only going to owe what they borrowed and the accruing interest rate and mortgage insurance premium that rolls into the loan.
They'll be charged interest on the $15,000 they
That's
borrowed?
right. They'll be charged on whatever they've borrowed. Most people looking at this product today are very intrigued by what we call a credit line feature. It allows you to be told of your equity, what you can tap into, and draw it when you need it, meaning only what you use is part of your debt. But the unique part about the reverse mortgage is what you don't draw is in a available line of credit, and it is also growing. Just like the debt would be growing, the available access to equity is increasing at a rate equal to an interest rate. So it's not earning interest, but it's allowing a borrower to tap into more and more of their own equity. It sounds confusing.
Yeah, it does sound confusing. But how would I make money? Where would I be getting interest on my principal?
you aren't with a line of credit on a reverse mortgage. You're not earning interest. The available equity is giving you, what's happening is you're getting additional available equity afforded to you. So if you start out with $50,000 in a line of credit, and that ability to tap into more equity has a growth feature, then what's going to happen is at the end of year one, you might have $52,000 available to you. It's only cash when you draw it out. So it hasn't earned interest, but it has a growth feature. And how it makes sense is that it's in the mortgage document. It's a calculation that has been made by the statistical folks that do things like life insurance and life expectancy, and they've created a calculation that makes this grow.
Okay, I got that part. But let's say that person that took the $15,000 out to fix the roof. When it comes to a point 10 years later, the parties die.
Right.
And the heirs inherit the house.
Absolutely.
Then if they sell the house, then whatever happened, the interest and everything on that $15,000 would be settled out of the cost of the closing costs.
Absolutely.
That's how they would pay it off. So the mother and father may just carry the debt till they die.
Absolutely.
And pass it off to the children, but it comes off the top of the sale of the house.
That's correct. And
so that's why it's a smart thing for us to use the money if we needed to live on.
That's correct.
And a lot of older people, if you get to the point, you might, I know from personal experience, and if you're not working an extra $1,000 a month, $12,000 a year, gives you a lot of leeway in what you want to do in living. And a lot of people that have a home could take 10 years, $120,000, and still pass on $100,000 or $200,000. Here's another
feature of the mortgage, Joe. I'm not sure we've spoken about it very much in the past, but another way that you can establish this loan and have access to funds is in something called a tenure. Tenure, like a tenured professor. And what it is a payment for life as long as you're living in the house. So you can establish right from the beginning that based on how much you have available to you in this loan, that you're going to get a monthly payment for as long as you live in the house. So let me give you an example. I'm working with a gentleman, he's 70 years old. He's got a house valued at about $320,000. He has no mortgage on the house, but he has very little Social Security income because of the way he made his income through his lifetime. So what he wants to do is take this mortgage and the tenure payment, not 10 years, but the lifetime payment, kind of annuitized, is about $1,300 a month. So he is going to have an additional $1,300 come right into his checking account every single month, along with the Social Security benefit he has, and he's going to remain in his home. So that is another really good option for people to supplement their income. And with the tenure payment, it doesn't matter what the loan balance does over time. If someone far exceeds life expectancy.
You mentioned loan balance. It shouldn't be.
Well, if you're taking every time you take a payment out of the loan, it adds to the loan balance.
I see what you're saying.
Right. It doesn't matter, though, how large the loan balance grows to, because remember, it's an FHA insured loan.
Well, that's right. We get a lot of people that call us and say, I'm living on $900 a month Social Security, and it turns out they're unremarried spouses of World War II or Korean or Vietnam service veterans. Didn't know they were eligible for aid and attendance. But those same people may own a $200,000 home, and if they did what you said and decided they wanted to take $10,000 a year out, or
exactly
$10,000 to last 10 to 15 to 20 years.
Right. And
So-
you add that to the Veterans Assistance Program. Now you've taken someone who was living on almost nothing and you've given them an income to really enjoy their retirement.
Yeah.
And
'Cause-
why not? It's their house. They paid for it. So
But see, this is, we tend to think that, we've got these $25,000, $35,000 workers, $40,000 a year, and they work their lifetime, but they have in fact paid for their house.
yes.
But they may not have they don't have any other retirement income other than their Social Security.
Right.
So they say, well, I can't live on it. But they just fail to realize that there is another hunk of money out there that they can use, but they have to realize it's not going to be something you can pass on to kids because you may use it yourself to live.
And I think my experience after 11 years of working exclusively with this mortgage product in Brevard County, 9 times out of 10, the children of the clients I work with would far rather their parents be settled and have what they need in their home than they want them not to do it so they have more of an inheritance. Most of the time, the kids, I come across this all the time where it's the children that said, Mom or Dad, I think you need to talk to a local reverse specialist because I think this might be a great option.
Yes, and I think we too often feel that we recognize we have a responsibility to ourselves to take care of ourselves. And we have assets, but they may not be the way structured they want them to be, but they're there and they are assets.
That's right.
And it's something that could be used. But we've never talked, it's called a tenured loan?
Yeah, tenure, tenure. It's just one more way to draw the funds out of the mortgage. So my favorite, and this is for more of someone in my age bracket, a boomer, is putting a reverse mortgage in place and letting the standby line of credit, just you put it in place and you have this line of credit and then you just don't touch that line of credit because of that growth feature. It continues to be establishing more availability of equity, and 15, 20 years from now, I'll never have to qualify for the mortgage then. That available funds will be sitting there waiting for me. It's a huge resource to add to your retirement. And then you take someone that's maybe 62 and would like to retire, but they want to have full Social Security benefit, which they won't get until 66. You can put your mortgage in place, take a monthly payment to replace the Social Security that you're not going to draw. And then when you're 66, stop the draw from your reverse mortgage and take your Social Security. There are so many
Wasn't there
options.
something that just happened to change that?
You're thinking about some of the Social Security rules.
Yeah.
But that's not related to this. I'm saying you would just draw from your house wealth.
Okay.
And then take your Social Security when you're 66 at 100% of the benefit. That's not related to the new. You're right, though. There's been a lot of Social Security changes.
Yeah, and it's very scary, and that's the whole thing with. I think most of us are afraid of reverse mortgage funding because we don't understand it.
Well, the biggest misconception, that loan where the bank takes your house. Your bank is buying your house. And the second biggest misunderstanding is that it's really, really expensive, and it's not anymore. It's changed so much.
Can you tell our viewers? I had someone that came to me about thinking they needed to change the law about reverse mortgage funding because something had happened to this person. But I asked Barbara to look into it. And can you explain what?
Sure, I can. She had received a reverse mortgage. She did not work with someone local. She worked with a representative long distance over a telephone. And she thought she had a good understanding of what she was doing. but she never saw the loan representative, not even one time. She wasn't even 100% clear when she had signed closing documents that that's what she was signing. And she was given some bad advice because the loan representative never sat down with her to really understand her goals and objectives.
Yeah.
And as a result, she got bad advice, and she just felt like she had been completely scammed. And so I went out and took all her loan documents and basically did what should have happened in the beginning, fully explained what the mortgage was she was in, how it worked, just as if she was learning reverse mortgage 101 right from the beginning. And at the end result was it was a good decision for her. And she now has some more options. And she said to me as she walked me to the door that she had the best night's sleep she has had in a solid year.
Well, the lady brought a very thick book to me, and I started reading it, and I read her letter, and I rapidly saw that I was getting myself in where I really didn't understand it myself, because it was a case, I think, of mixing apples and oranges. The paperwork on one hand was very clear about what it said and what the expenses were, but she just didn't understand it. She was a realtor.
Yes.
But this is it's a complicated process, folks. It's not something that you enter into without understanding what you get yourself into.
Right. And so I'm always a very big advocate that if you have an opportunity to work with someone that is going to be at the other end of the phone right down the street and there to follow up with you when you need it, it's just really important. You know, I think it's very important that people, I know they receive solicitations to call an 800 number, and that seems like a good idea, but the follow-up and really understanding it sometimes gets lost in the
You're
shuffle.
the second person that's talked to me about an 800 number. In your case, I think people have to be very, very careful. In the case of the person who talked to me this morning, it was the New Kindred Hospital. It's Kindred Healthcare.
Right.
And very, very few. I had her on, I did an interview with her this morning. We're talking about Kindred Healthcare.
Right.
And it's a very, people don't understand what a Kindred Hospital is. The fact they just acquired a Gentiva skilled nursing system throughout the United States, which, and Kindred Healthcare, that little hospital across the street from the airport, is in 47 states.
Right. I've been introduced to it recently. I think it's wonderful.
Yeah, and I just think it's great to be able to know about it. But the same thing, they offer an 800 number for people that call them and ask them questions.
Right.
And I'm going to call her myself. I'm going to test. I told Lisa I was going to test the system, but I will do that. And because I don't want to talk about anything myself on these TV shows unless I have a pretty good understanding that it's good information for all of us to know.
I think that calling, and I have a lot of clients that come to me because they've called an 800 number, they've gotten information mailed to them in the mail, but they just know that they want someone to sit down with them. And that is perfect. I mean, knowledge is power. And if you can receive some written information and a DVD and start your learning process and go on the internet, I have myself a wonderful website. And that's a great way to start. But when it comes down to really deciding what does my financial situation look like and how will this fit in, I prefer to have their financial advisor involved, their CPA, certainly their family. I think it's really good.
Not over a telephone.
No, I think they need to be around a kitchen table or at the CPA or the financial advisor's office. I think it's very important because for all of us, boomers and seniors, this product is a strategy that's fitting into retirement. And at 11,000 baby boomers a day, I think we're going to soon see this product back into the banks, be more of a mainstream loan, and we're going to see people doing it more and more because we really need this as another resource to our retirement planning.
You're going to see people that have acquired a $500,000 or $600,000 house, and it's simply because the value of the land has gone up. They've purchased homes maybe on water, and what they paid $200,000 for now is valued at $600,000 or $700,000. And if a person takes a reverse mortgage out, well, they go out and they have an appraiser go out and give an appraisal, and that's what they're.
That's the starting point.
That's the starting point.
Right.
It's
now we have a national lending limit of $625,000.
I was going to get you to say that.
$625,500. So that's our national lending limit. And so that's really the maximum value that the FHA insured reverse mortgage, or HECM, will allow us to use. We're just seeing now some lenders are coming out with what they call a proprietary jumbo product, which we don't see it so much in Florida, but certainly in California, it can be used for homes, $6 million homes and above. And it's a proprietary product. It's different. I know it's not insured by FHA, but so again, as home values are increasing, we're starting to see the rise of these products.
But I think it's something it's important, Barbara, that for people to not say I don't have anything, because a home to me should be something. If we're smart, we can live in the home till we die, but we can do so with a little bit of comfort instead of trying to eke out an existence on $700 or $800 a month, so I can pass a $500,000 house to a couple of children. It doesn't make sense.
No, it really doesn't.
If you denied yourself,
I don't think the kids want that either. They'd rather know the house was whatever needed to be done to the house to make it safe for their parents.
Yeah, but to see we're almost out of time. The kids don't. I don't think they care that much about their parents using the money. I think parents make a mistake.
I think so too. It's just a mindset.
Okay, last comment on reverse mortgage. You got 23 seconds. 20.
Knowledge is power. And so people should actually really not just decide what they think they know. They should ask and make sure they're asking a specialist.
I agree, and in the last 9 seconds, I'll say that I second what you're saying, Barbara, because I've learned a lot myself, not only talking to you on the shows, but in talking to you over the phone, because I do talk over the phone. But I want to thank you for being on the show, and I want to thank you, viewers, for watching today's episode of Helping Seniors. Thank you very much. I'm Joe Steckler. Thank you for joining our program today. I'd like to remind you that our senior information line is available to you at 321-473-7770. There you can get help and direction that could be helpful for your specific situation or circumstances. The work of helping seniors is very important, but we can't do it alone. That is why our sponsors here in Brevard County are so important. I'd like to thank our many area sponsors, businesses and medical providers who support the mission of helping seniors that help us carry the cost of our media efforts. If you'd like to join us either as a business partner or simply donate as an individual, we would welcome your call at 321-473-7770. You are always welcome to visit our website at www.helpingseniorsofbrevard.org. Thanks so much for your help. It does make a difference.